Hello, today I will share with you my experience of the best service in the category Best Business Loans. Having tried a huge number of services from this category, I chose the most reliable one for myself. This company provides much needed services. Moreover, there are no fees for using the service, which puts it ahead of some of its competitors. In this short video, I will tell you a few secrets that few people know about that make it truly one of the best in the Best Business Loans category. It's about Lendio. I will leave a link to the official site under this video. Now, let's get started.
Lendio is a business finance platform that matches clients and sponsors. Although Lendio does not lend directly, its network of over 300 business sponsors, including well-known companies such as Cabbage, OnDeck, Amex, Blue Vine, and many others, is designed to provide a single source of funding. Lendio does not provide business loans. Instead, this service works more like matchmaking for lenders and business owners. Using an aggregator like Lendio can be beneficial for several reasons. The company does most of the funding for you. You are offered several offers, and the service is completely free to use.
For those looking to give it a try, Lendio is undoubtedly well worth the effort. Customers report that Lendio's support team is responsive and helpful, and the application process is quick and easy. If you are new to the alternative lending market, Lendio is a good place to start.
Lendio is a business loan marketplace. Provide information about yourself and your business, and Lendio will help you find the lenders to whom you are eligible. This includes a wide variety of financial products. The availability of specific products will depend on various factors such as your credit rating, the industry in which you work, how long you have been in the business, and the amount of income you generate. In addition, the terms of the loan will differ depending on the Lendio partner. The loan options available through Lendio include short-term loans, loans in installments, usually for less than a year, and the borrowers are charged a fixed fee rather than a regular interest rate. Payments are made daily or weekly. Loan, where borrowers are given the loan amount as a lump sum in exchange for a promise to repay the borrowed amount plus accrued interest. The length of the term depends on these loans. Payments are made monthly, weekly, or daily.
Cash advances to merchants. A sponsor buys a percentage of your future card sales in exchange for a lump sum payment. The sponsor collects money by holding a percentage of your daily card sales.
Lines of credit. Instead of giving you a lump sum, the lender sets a credit limit that you can borrow against. You can reuse your line of credit as long as the total amount received does not exceed your credit limit. SBA loans. Term loans and other products that are partially guaranteed by the Small Business Administration. These loans have some advantages over most other loans in terms of maturity, interest rates, and available loan amounts. Equipment financing. Loans and leases designed to facilitate the ownership or rental of tangible assets.
Any business can apply for Lendio services. Unfortunately, there is no guarantee that you will receive funding. Lendio said only 6 out of 10 businesses receive approval for a business loan through its service.
Since Lendio works with over 300 different organizations, from creditors specialized in startup loans to banks and SBA lenders, your business does not have to meet any specific requirements to be eligible for this service. However, just because you are eligible to try this service does not mean that you will receive funding. To have the best chance of getting funding, Lendio recommends that you meet or exceed the following requirements. Time in business, 6 months. Credit rating, 550. Monthly income, $10,000. Some businesses may have trouble complying with these rules. For example, startups in risky industries or low-income businesses may find it harder to find funding. In addition, funding requirements for equipment are tightening. The preferred qualification level for this type of loan is 12 months of work and 650 credit points.
Lendio does not charge any fees for its services. Instead, Lendio's revenue comes from partner lenders. Loan terms may differ depending on the sponsor you work with.
Interest. The principal cost of the loan, interest, is usually expressed as a percentage of the loan amount you borrowed. This number can be confusing as different lenders can quote daily, weekly, quarterly, or annual interest rates. Alternative lenders, especially those offering short-term loans and cash advances to merchants, may use a fixed commission rather than an interest rate. The fixed commission is expressed as a percentage of the loan amount or as a decimal multiplier. So if you borrowed $10,000 at a 20% commission, you owe $12,000. While this is easier to understand than interest rates, be careful with fixed fees. They can often be more expensive. Processing and administration fees. These are fees that may or may not be charged by the lender in addition to your interest rate or a flat fee. They represent the cost of processing and managing your loan. These fees may not be disclosed in advance, so be sure to ask your lender about them. These fees can be fixed or be a percentage of the loan amount.
Loan companies are more flexible than loans. They come in two different forms: renewable and non-renewable.
Revolving lines of credit are a bit like credit cards. You can use them in small or large amounts within your credit limit, and you only pay interest on the amount of the loan you used. When you pay off your debt, this loan will be available for use again. Non-revolving lines of credit are almost identical, but the loan is a one-time transaction. Once redeemed, it no longer becomes available for use. Typically, revolving lines of credit carry higher interest rates than non-revolving lines of credit. The convenience of a line of credit usually comes at a cost, often in the form of regular administration or usage fees. Otherwise, you will pay off your line of credit the same way you pay off a loan. Some lenders may even provide a grace period for your commercial loan before you need to start making payments.
Qualifying companies can obtain an SBA guaranteed loan through one of Lendio's partners. These loans tend to have lower interest rates and longer maturities than those that would otherwise be available to new small businesses.
There are several different types of SBA loans, the most common of which are General 7 loans and CDC 504 construction and equipment loans. There are additional types that you may find indirectly useful, such as disaster loans. Be prepared for a longer approval process if you decide to apply for an SBA loan, as you will need to meet the essential requirements and paperwork required by the Small Business Administration. Some lenders may offer express SBA loans, which can speed up the process a little. It's still not very fast, at the expense of a lower maximum loan amount. Choosing a preferred lender, a status the SBA grants to some of its partners, will also speed up the process.
If you need working capital quickly, especially if you don't have a good credit history, a short-term loan can come in handy. These loans usually have a fast and easy application process, with funds arriving in your bank account in a day or two if you were lucky.
Keep in mind that most short-term loans need to be repaid daily or weekly by automatic withdrawals from your commercial bank account. Short-term loans usually do not accrue interest like other fixed-term loans, since their maturity is usually less than a year. Instead, lenders charge a fixed interest rate. Thanks to the fixed fee structure, you don't have to worry about prepayment penalties, and in some cases, you can reduce the amount of your debt by repaying the loan early. Usually, lenders who allow this will be pretty candid, but be sure to ask if you're expecting to pay off the loan ahead of time. Because short-term loans are often subject to high interest rates and laws governing interest rates vary from state to state. Individual lenders may or may not offer them in your state.
Term business loans are closer to the traditional bank loans that you might be used to. They accumulate interest and offer regular recurring payments. These payments can be monthly, weekly, or even daily. In many cases, these payments will be automatically debited from your checking account through an automated clearinghouse or similar service.
Depending on the lender, you may have to provide collateral or sign a personal guarantee. This allows the lender to claim or liquidate the assets you have placed in order to recover some of its losses if you don't pay back your loan. Make sure you understand what you are investing in the loan, especially in the case of unsecured loans that do not use traditional collateral. In particular, personal guarantees can be a little confusing if you haven't encountered them before. Basically, a personal guarantee allows the lender to take care of your personal assets and your business assets if you can handle payments. Since term loans last a little longer and your financial situation may change, you should be aware of factors such as prepayment penalties.
Equipment loans, although they have many similarities to a business loan, recurring payments, interest are handled differently than loans used to supplement working capital.
When you borrow money to buy equipment, you use it to purchase a tangible asset that can be used as collateral for the loan. The lender's risk and allow him to offer better terms and rates than no collateral. This comes with some trade-offs. Even when dealing with alternative lenders, the equipment financing process tends to be a little more traditional. Lendio offers a minimum credit ratio of 650 and 12 months of service. While many equipment loans traditionally require a down payment, Lendio sponsors don't.
If you are a business owner and want to apply, you must start by creating an account and completing an application. The application will ask for basic information about you, your business, and your business finances. At this point, Lendio will perform a soft check on your credit report, which will not affect your score.
Lendio will store your information in order to receive offers from lenders that you may qualify for. According to the customer service agreement, this step should not take more than 72 hours. A Lendio representative will contact you with any offers received on your behalf. You can compare offers and choose the one that best suits your business and situation. Once you have made a decision, you can proceed with the financing process with your chosen lender.
The Lendio website provides all the information you need about the services, and the merchants are transparent as well. The only caveat is that you won't know the exact terms of your loan until you pair up with the lender. Given that Lendio itself does not have such information, it does an excellent job of preparing potential borrowers for what they can count on.
There are some subtle differences between the types of loan products, so you may need to click on some links to find all the information available. Be sure to use loan calculators to figure out what to expect. However, Lendio generally has an excellent ratio, although this year's sales and ad transparency is grayed out. The company has been alerted by the Federal Trade Commission and the SBA of potentially misleading marketing of coronavirus aid.
Support is available by phone or email. You can also interact with the company on Facebook, Twitter, Instagram, and LinkedIn.
When you apply for a service, you are assigned a funding manager who is your only point of contact. Your finance manager will present you with proposals, help you decide which options are best for your business, talk about loan products, and will usually be available if you have any questions. It is worth noting that Lendio's website has a public service agreement that promises customer service standards such as transparent and respectful customer service and timely responses to questions. While these are not particularly groundbreaking standards, the fact that Lendio publishes its agreement means that the company at least understands how important these issues are in creating a positive experience for borrowers.
Thanks for watching this video and check out the channel for more videos.